the Block Drops. This week we have the Dubai Real Estate Tokenization Program on the XRP Ledger, Bitcoin Ordinals bridging to Cardano, Katana for DeFi from the Polygon Labs team, and much more. I'm your host, Mauricio Magaldi, and this is Block Drops, your weekly digest on blockchain for business. These news are not a form of endorsement, sponsorship, or encouragement for consumption, and are meant for educational purposes only. In the first drop today, we're going to cover an ecosystem that we don't usually cover, which is the XRP, the Ripple ecosystem. In this case, a very hefty development in that particular ecosystem with a new partnership signed with the Dubai Land Department through a company called Control Out that will develop a platform for a tokenization framework using the XRP ledger. The goal of the project is to structure, mint, tokenize, and distribute real estate deeds on the blockchain, which aims to tokenize around 16 billion worth of US dollars in real estate by the year 2033. That's a hefty number, and interestingly enough, it only represents 7% of total property transactions in the space in Dubai, which is a very prolific real estate development region, not only for large luxury real estate, but also global investors of many kinds. According to the people involved in the project, this is a highlight for the XRP ledger. It is interesting that they will get to process a significant portion of the market, and obviously it goes with the rest of the ecosystem, such other DEX applications that will be able to trade this tokenized real estate assets, and this probably will increase the adoption of XRP as a whole, and hopefully we'll see more developments in that particular area. XRP was one of the first public chains that I saw when they implemented, I think it was named OnePay at Banco Santander, and all the treasury movement that they have on a daily basis using the XRP ledger. Interestingly enough, Brasa Group, a bank, an FX specialized bank in Brazil, recently announced that they are adding their USD stablecoin, USDB, on the XRP ledger, which makes perfect sense, because if you have a real world asset without corresponding liquidity to trade, it's a much harder sell in the sense of democratizing finance. And if this real world estate program is to be permanent and move that much money until 2033, they will need a liquidity counterpart, which stablecoins are perfectly suited for. Let's see how the market reacts and if this really makes a change for XRP. The world's original blockchain might see a resurgence, if you will, in terms of utility by adding DeFi capabilities from other blockchains. This is what we saw this week during the Bitcoin conference in Las Vegas, when the IO team, input-output team, which is where I work, full disclaimer, announced with the help of Fairgate, the developers of BVNK, that they are now able to bridge Ordinals, Bitcoin Ordinals, from Bitcoin to Cardano. Both are UTXO ledgers, unspent transaction output format ledgers, which is the same as Litecoin, Dogecoin, and even Midnight, where I work. And this is very interesting because now it's possible to bridge Ordinals into Cardano using BitVMX. So BitVMX is a interoperability protocol. It's decentralized, it's trust minimized in terms of handling the assets, so it's non-custodial, and it wraps the UTXO on Bitcoin in a format that Cardano can identify, and then the Cardinal protocol, which was developed by IO, enables that secure transfer from Bitcoin to Cardano using BitVMX as the decentralized validation system that ensures that the transfer is secure and trustless. What I find very interesting about this is this opens Bitcoin to a world of DeFi in other chains such as Cardano, because in the way that it's done today, when you get your Bitcoin into a vault and then it gets wrapped into, say, a ERC20 token on an Ethereum compatible chain, there is a lot of trust assumptions. Most of these players are centralized and they become honeypots for the corresponding assets, which in and of itself is a security risk. So this will yield new financial instruments. It will obviously increase liquidity because the transfer between these two chains would be made possible and trustless and obviously decentralized. And it's going to be probably a resurgence on Bitcoin DeFi, because now you have other chains enabled to use Bitcoin as the financial liquid asset in their DeFi ecosystems. This could potentially, not only in terms of interoperability, but open other seas for Bitcoin to play a part, which will only increase the value of Bitcoin as a technology and provider of liquidity to the crypto ecosystem. Maxis will probably frown upon this piece of news, but I think if we are to become the de facto financial infrastructure of the world, interoperability matters more than they want to admit. So big point to Taproot for that. This week we also saw the announcement of a new DeFi ecosystem, if you will, emerging from the Polygon Labs shop in partnership with GSR. Katana. Katana is a new DeFi-focused blockchain EVM blockchain in the layer 2 ecosystem. And it was created by the Polygon Labs team with GSR with the intent to be, in quotes, fix DeFi. And the way they're going about this is very interesting, because they're going to focus on two very specific things that plague DeFi. The first one is user experience. This is at the top of their announcement. And the second is dip liquidity, which allows for better yield, better risk management. And this is going to work as a permissionless network. It will have its own native token, CAT, K-A-T, of Katana, and it will also be fueled by ETH as the gas token. It's been incubated by Polygon and GSR, and will concentrate liquidity on a core set of applications and asset, so avoiding fragmentation as other ecosystems. And it will allow a combination of yield sources. It includes the Morpho vaults on Ethereum through the Vault Bridge, native AUSD, and also they will share a portion of the chain-owned liquidity from the validator sequencer fees as they go about producing blocks. It's going to be user first, as they announced it, and it will allow some of the most popular assets, such as Ether, USDC, USDT, Rep Bitcoin, and the chain-owned liquidity itself. And multiple different yield strategies can be operated in that particular ecosystem. They're currently on pre-deposit campaign. You can lock up your tokens there and get rewards up to 10 million CAT total, and obviously a lot of NFTs for milestone badges and whatnot. Once you deposit the assets, they'll be locked up until mainnet goes public later in June this year, and then you can either move your assets around or lock them up in across the yield ecosystem of Katana. In my opinion, I don't see why you would have to have a different chain to do this, but it's interesting because if you are optimizing for specifics on DeFi, you might as well have control over it, which means that interoperability is increasingly critical. In a week packed full of news, here's more. Circle filed for their IPO finally at the New York Stock Exchange. Gemini issued a new report on the state of crypto for 2025. BVNK, the stablecoin sandwich operator, partnered with Worldpay to take stablecoins to over 180 countries. The UK's FCA issued a new consultation paper, 25/14, covering stablecoin issuance and cryptoassets custody. The SEC issued a new guideline on staking definition, stating that not all staking is a security. Reown, the commercial arm from the Wallet Connect Foundation, published a new feature that allows for non-custodial wallets to be compliant to the FATF travel rule. Rebank published a very interesting guide. It's the Stablecoin Practitioner's Guide. If you're operating in the stablecoin world, you should get this. And Midnight, my project, has partnered with Outlier Ventures to a new cohort of the Post-Web Accelerator on privacy-enhancing technologies. Catch us online. We're on Instagram at BlockdropsPodcast, on Twitter at BlockdropsPod or 0x Mauricio. We're on Lens at Blockdrops.lens. We have a newsletter on LinkedIn. Write to us at blockdropspodcast@gmail.com, and you can listen to the Blockdrops podcast at Spotify, iColab, Faberbund Tech, and all of the other major streaming platforms. Yay! Shout out to the people who share the links you will find in the episode notes: Julia Marrongelo, Rafael Lima Sacker, Stefan Lora, Carlos Arena, Ben O'Haley, Jess Holgrave, Luca Prosperi, Will Beeson, and Fahmi Said. Don't forget to leave the ratings on your favorite player and check out the merch store at blockdropspodcast.xyz. This is all for today. Stay rare, stay weird. LFJ.